Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold and S&P fundamental and technical analysis for the week ahead, starting the 19th of January. And just apologize for last week. Last week I was sick. There's a flu going around, a really bad virus. They're not calling it COVID, but it feels exactly like COVID, if not worse. And I had that last weekend, and so really wasn't up to doing anything, let alone any kind of videos. So recovered now, and so back to normal scheduling. So yes, getting into the week ahead. So the week ahead, 19th in January, next week in the US, attention turns to Trump's inauguration. Key data includes S&P global PMIs. Globally, the Bank of Japan is expected to raise rates by 25 basis points, while flash PMIs will provide insights into private sector activity in the Euro area, Germany, UK, and Japan. Other highlights include Germany's ZEW sentiment and UK jobs. So a few things going on this week, but the main meat and potatoes, I guess, is going to be Donald Trump and his inauguration, and now ushering a new era for the dollar, right, for the US economy and for the dollar. So getting into this week's analysis. So starting off on the equally weighted dollar index, and the dollar index, dollar overall has just really been going from strength to strength, right? There is a fear that the dollar is a little bit overcrowded in terms of the buys. So long positioning is a very crowded trade at the moment. So you can see whenever we did have the dollar, when it comes to COT reports, institutions, asset managers are our leverage funds are quite long, then there can be a bit more of a pullback, right? Profit taking going on, etc. But it does look like speculative currency traders, still bolstering wages for an even stronger US dollar in the lead up to President-elect Donald Trump's return to the White House. Derivative traders held the equivalent of roughly $34.6 billion in total bets that stand to benefit from further gains in the dollar as of January the 14th, and nearly $1 billion increase from the week prior, according to the latest Commodity Futures Trading Commission data released on Friday and aggregated by Bloomberg. That's the most since 2019. They're looking for opportunities to buy. Kathy Leon, a veteran currency trader and managing director at BK Asset Management, said in an interview ahead of the data's release. So Trump's policy vows are dictating the overall bias of traders, and positioning now is seen as the biggest US dollar headwind, which is a concern we share, wrote Bank of America currency strategist, including Art Sinner and Michalis Rousakis, in a Friday report to clients. US dollar long stand out versus history, and more so versus the past year. So yeah, there are concerns that the dollar is on the long side. You never really want to be a buyer at highs anyway. I think a pullback is definitely necessary. I am in some dollar trades, ended up getting in on a bit of more of a pullback when the dollar index pulled back here on Wednesday, is where we but I and some of the members in the group got in on the euro dollar, and so far so good on that trade. But establishing new trades, I'm not too sure. I'd rather wait for a bit more of a pullback before looking for any kind of dollar longs. So looking at the dollar yen, the yen is in the Bank of Japan really now is expected to start to hike rates this week. And it says here the yen surged as Bank of Japan Governor Kazuo Ueda joined his deputy in strengthening market expectations for a potential interest rate hike next week, signaling the central bank is doing its utmost to avoid a global market crash that followed July's hike. So his remarks suggest the Bank of Japan's two top officials are on the same page, as Deputy Governor Roy Chiozo Himeno, said Tuesday the policy board will decide whether to raise rates, signaling the possibility of a hike. And so Ueda's comments prompted Nomura, who's a bank, to shift its call for a hike next week from its previous forecast for March. The overnight index swaps show 72% chance of a quarter point rate increase at the Bank of Japan's January 2023-2024 meeting. Actually, no, sorry, 23rd to 24th and 2023-2024, not the year, up from 61 on Tuesday. So, yeah, I think rate hikes are probably on the table for the yen, which should probably push it to the downside a little bit. But I think overall I am more of a buyer of the dollar yen than I am a seller. Reason being is because although the Bank of Japan are hiking rates, and you typically want to buy the bank that are hiking rates, I think as long as the US Federal Reserve are looking to hold rates or not cut as aggressively as was first thought, I think the carry trade and the difference between the two interest rates should still actually support the US dollar to a certain degree. Plus, there's still fears around the Donald Trump's policies, if he's going to be quite aggressive on the tariffs with China and Canada and the rest of the world. So there's still that uncertainty. So for now, you can look for short trades if you want. Any pullbacks into here would be nice shorting opportunity, especially if the dollar starts to sell off. That'd be a decent trade there. Or you're looking for a buy trade either at the 154s or even down to the 150s, which would represent about a 600 pip move. But let's see. I'm not saying it's going to happen this week. It could happen over the next couple of weeks, but ultimately those you could look for buys or sells on the dollar yen, although I'm looking for more buys still. Looking at the dollar Swiss, pretty much the same thing, but I think the Swiss franc are still looking to cut rates. I wouldn't say aggressively because they haven't really got a lot of rates to cut. I think they're at 0.5% on their interest rates. And so, and their currency is seen as quite expensive. So I do believe that any pullbacks into a demand zone really should be a buying opportunity, especially if you've got some sort of support and resistance there, some other technical analysis in there at those levels is what I would be looking for in terms of buys. So buying the dollar for a bit cheaper as it starts to pull back, or if it does start to pull back anyway. Those are the opportunities that I'll be looking for. Dollar CAD, yeah, the Canadian dollar, Bank of Canada is still cutting rates. So again, probably part of this resistance is to the upside still. So any pullbacks down into that demand zone, I think, are nice buying opportunities. Yeah, out of the two, again, Donald Trump did make a kind of a veiled threat when it came to Canada and trade and things like that. So let's see what happens. But I think the path of this resistance should still be to the upside. If the dollar does sell off across the board, if it does, I think it's really only because of the really kind of positioning and profit taking going on. But overall, the dollar should still be a buy as long as the data supports that, right? So if the data doesn't support dollar buys, let's say for example inflation starts to drop dramatically, and the Federal Reserve start to price in more cuts, let's say, or the economy starts to flatline, then in fact that would be more of a reason to start to look for dollar shorts. But until that happens, if it's just price pulling back, then and everything remains the same fundamentally and risk sentiment rise, then the dollar remains a buy. The pound, so the British pound, last week we had a bunch of issues with the pound, mainly stagflation fears, right? Stagflation is where you have kind of like sticky inflation or rising inflation, and you have a contracting economy. And so looking at the UK, it says here traders in the UK are now favouring 3 interest rate cuts from the Bank of England this year after weaker than expected retail sales bolstered the case for more aggressive easing to help boost failing economic growth. So earlier this week, traders were fully pricing in just 1 cut, so they've gone from 3 cuts now from 1 cut. earlier in the week. And it says here, while investors are still concerned that inflation will keep government borrowing costs high, those worries appear to be easing somewhat, with data earlier this week showing inflation decelerated. That, along with weakening growth, has prompted investors to price in more cuts than interest in the coming months, supporting bonds. And further easing would, however, hurt the pound, as the prospect of looser monetary policy threatens to erode its appeal. Sterling has slumped more than 9% from a September high, and is the worst performing currency among the group of 10 peers this year. So I don't see any real reason to buy the pound at the moment. I think we need definitely some economic growth or markers and data that shows that there's more growth for the pound, and fears of stagflation are unwarranted. So it's really just a case of waiting for a pullback. I think either you're looking for something like that, or you'd have to wait for prices to continue making lower lows. As it makes a lower low, it creates a demand zone here, and then pull back up to that supply zone. Apologies, a supply zone here, and then you're looking for a pullback. So a supply zone here if prices do pull back, or a supply zone if we make lower lows. Those would really be the options. Again, no real reason to buy in the short term against the dollar anyway. You can maybe find a buy against another currency, like maybe the New Zealand dollar, but not against the US dollar, not for now anyway. Sorry, we're looking at the pound yen, and again the pound yen, with the yen strengthening in terms of rate hikes, and the market pricing in a bit more rate cuts for the pound. You're looking at really, I think, a bit more of a pullback into a nice area of supply before looking at going short. I think that'd be the direction of travel in the short term anyways. That's where we are. Looking at the euro index. So the euro index is equally weighted. Euro index is just, again, looking at the euro against a basket of currencies equally weighted. So the dollar, the pound, the yen, the CAD, the Australian dollar, the Swiss franc, and the New Zealand dollar. And ultimately I look at this as well as all the other equally weighted indexes to basically indicate where I am in terms of the strength and weakness of the currency overall, right? And so for me, I think the euro is more of a sell than a buy. So prices have pulled back, so just looking for really triggers to look for short trades and how much downside potential we do have. So looking at the euro last week, and it says here that the ECB to continue cutting rates. The ECB will be confronted with a mild version of stagflationary tendencies, continued sluggishness for the economy, and accelerating inflation. This is a complication for the ECB, potentially widening the current divergence between hawks and doves. And also, as long as the current inflation pressures are anticipated to diminish over the year, the ECB is likely to overlook the present inflation resurgence. All of this means we see the ECB continuing to cut rates. And it says here, ECB December forecast used a terminal rate of below 2%. Just to deliver the outcomes of the December forecast means that the ECB will have to cut rates by a total of 100 basis points. The next ECB meeting in 2 weeks will bring the next cut. So yeah, I think the market is still expecting the European Central Bank to deliver quite a lot of rate cuts this year. So I think any pullbacks on that, or you can look for short trades now on the euro. So when we look at the euro dollar, still one-way traffic in terms of pullbacks and going short, right? So we managed to go short here this week, but I'll go over that trade a bit later on in the video. But yeah, for me, I think if you're looking for any trade, it should really be, path of these resistance should be to the short side. So what I'm going to do is I'm just going to put some demand zone on here. Not to say I'm looking for any kind of demand zones, really it should be short trades, but just in case you are, then you really, I think you can look for maybe a demand zone in where we are now, or just slightly lower. But ultimately, I do believe that you should really be looking for short trades. So any pullbacks up into this area here, so yeah, it would be there. In fact, I'm going to get rid of that demand zone because I'm not really interested in demand. But I would say within that area, you've got an area of support and resistance there, and then you've got another area of support and resistance right there. So really, those are the areas that you would look for a pullback if you haven't got any short at the moment. So pull back up into that area there, or up into this area here before looking at going short. Or you can look for some intraday areas as well of support and resistance that you may not see on the daily, but ultimately path of these resistance should really be more to the downside. Euro yen again, with the euro cutting rates quite aggressively, and or expected to, and the Bank of Japan looking to hike rates. You're seeing lower highs and lower lows being made. So again, I'll probably say looking for short trades would be the better option. So looking for supply as prices pop up or can pop up into here. If not, then you're looking at really a move to the downside and then a move to the upside before looking at, again, more of a supply zone there. So yeah, those are really your options. I would say look for more short trades than long trades, and again, as long as the data supports that. Euro pound, again, we did make over the past week or two a massive move to the upside. And this was basically driven by the bond gilt crisis and the stagflation fears. And so not really a pair I'm interested in anymore, but it does bring us up to actually quite an interesting area of supply. So I think here would also be, if you know how to trade stop hunts, that would be actually a really nice stop hunt developing. Doesn't say, I'm not saying that it will be, but if it does go above, then close back inside, then that's going to be a really nice stop hunt to the downside. But the question is why is that going to be a bargain for the pound, right? I'm not too sure it is at the moment, especially against the euro. So for me, I'm just going to stay away from this pair. But if you are looking for a trade, then that's really the trade, or you're looking for prices to pull all the way back down to the 0.83 area before looking at going long. Aussie dollar. So Aussie dollar, again, looking for more short trades, and a pullback really should be on the cards. But also as well, a risk to this trade will be if Donald Trump isn't so aggressive when it comes to tariffs, right? Or the tariffs that he puts on China are seen as I said, a bit more calm, and he's not trying to, and the market has to kind of price that out. So there could be actually be a decent move to the upside. It all really just depends upon what Donald Trump's policies are going to be. But if they are continuing to be, the rumor is that they're going to be on the quite aggressive side, then you'll likely see prices move to the downside. If not, then you could see actually a decent pullback, and the Australian dollar is likely to be a buy. So let's see what happens with the Australian dollar. I think we're definitely at a bit of a turning point, but it's going to be more driven by, again, the fundamentals rather than just, things like profit taking. Gold. So gold, again, pulled back, made higher highs, higher lows. We've touched this level, several times now, 1, 2. So the more times the level is touched, the weaker it becomes, the less of a bargain it is. So if you are a gold bull, then in fact you're probably expecting either prices to move to the upside still, or a bit more of a pullback before moving to the upside. So that would be the direction of travel. Or you could be looking for a nice sell trade here, but just be mindful that, again, when you have quite an accurate level that's been touched several times, you could be susceptible to a stop hunt. All right, now again, I think dollar going higher could make sense and does make sense if the US dollar temporarily starts to weaken, right? So typically they move in opposite directions, and so gold, if the dollar starts to weaken due to profit taking, it being a bit more of a crowded trade, you could see in fact gold continue to move to the upside. So let's see what happens this week though. The inauguration, likely to be plenty of volatility on the cards, and so let's see what happens. And the S&P making higher highs. Again, not surprising really. There was a buying opportunity around here. There was a bit of a stop hunt there at that level as well, right there, where you had the stop hunt right there and then move to the upside. I would expect the S&P to continue moving to the upside. The Fed is still looking to cut, although not as much as was priced in last year. But ultimately, as long as the economy is doing well, and I think the S&P ultimately should want to continue making highs, even if it pulls back in the short term. Eventually, I think any pullbacks really should be buying opportunities moving forward. So there are opportunities, of course, to short. Right, if you do want to go short, you can go short of market highs for sure. Supply right there, and I guess you've got an area of supply as well right here, and you've got a level of support and resistance right there, and at the absolute highs. So if you are looking for short trades, you can start to look for short trades now, but ultimately I do think that the path of the resistance is going to continue to be to the upside, even if we get quite a deep pullback into any of these areas here. So that brings us to the end of the analysis, but looking at the new trades and the trades that I got into over the past couple of weeks, or since the new year. So this was the pound dollar, and on the pound dollar, this was a short trade. I only managed to get in on one position and ended up only making a 1-to-1. It was a little bit annoying because of the fact that I planned to hold this at least half a position, but by the time prices, I got the alert to kind of to cancel my pending order and take partial profits. Prices have pretty much shot down and taking me out of my full position. So, because typically what I do is I make sure that I've at least got my target there. In a worst case scenario, if I'm not at a desk or anything, or if I'm out and about, at least worst case scenario, I can take some profit. But I'd actually planned set an alert just before there, so as it gets closer to it, I can say, all right, then, well, I'm going to let this run and take 50% and then let it kind of swing, which it really actually ended up doing, because we was bearish on the pound, but unfortunately, because of this sharp drop at the time, didn't get time to get out of that. But many other traders in the group did end up holding on and made a really good decent amount of profit on that one. So ultimately, as long as we're making money, that's the main thing, right? But the entry was here, right? So that's where we entered, well, where I entered anyway, and then it was just a case of looking for some pullbacks. So I typically try to enter into around 3 or 4 positions. If prices spike up, yeah, like this, then I'll get in on a sell pending order, right there, and there, and hopefully it gives me, or say hopefully it gives me a better price, right? As prices pull back, the risk reward is a lot better there, and there. But on this occasion, it didn't, so only got in on one position, but then ended up getting that being a profitable trade anyways. And then we've got the euro dollar. So the euro dollar this week ended up getting involved at this area here. So right there was where we got in, and on this occasion it did spike up, right? So it did actually pull back. So onto the next position, which was right there. So now it's a case of I'm in 2 positions. I haven't quite hit a 1-to-1 on that position just yet. Didn't quite fill my order, right there. So I'm waiting for prices hopefully to just come down a little bit more, right? Trigger me out of that position, and then I'll be in only on this position, and then I plan, which is basically the original market order, and then I plan to kind of hold this and see if we can get to parity, because parity is something that some market participants are pricing in for, and then I'll just cancel the orders above as well. So once I make at least some profit, then I take the risk out of the market. So so far so good on the pound and the euro dollar. So that's it for this week. Still waiting for a bit more of a pullback on the dollar to get involved in some other trades. So yep, that's it. Hope you all have a great weekend and a great trading week. Take care and speak to you all soon.